Hey there, thanks for stopping by Reversed TV. My name is Sean, and today I'll be talking about 3 potential reverse mortgage drawbacks. Now, obviously, I love the program. I've done a bunch of these transactions as well as regular mortgage transactions, but anyone that tries to tell you that any program is perfect, 100% perfect, or 100% of the people is just trying to sell you something. So it's always important to look at the pros and cons of anything you do in life when you're talking about such a big financial transaction. With that said, I'll go ahead and just dive right in, okay? The first thing that I want to talk about is, oddly, not everyone realizes that this is just like a regular loan in a lot of regards. But the biggest difference is you don't have to make any monthly payments, okay? So, it's a loan. Banks and lenders only give loans because of what? Starts with an I. Interest, okay? Now, since you're not making a mortgage payment with a reverse mortgage, what happens to that interest? Well, instead of making payments where you're front loading and just paying a bunch of interest and very little principal down like a regular loan, the interest actually gets added to your balance each month, and then it just compounds from there. So the balance grows. That's one potential drawback. But frankly, that's what most people do it for, because usually people actually need this product and they can't afford to keep making their mortgage payment as things change in life. Maybe they don't have enough saved up for retirement, or they recently stopped working, what have you. That said, you can actually make a payment though if you want to, just like a regular mortgage. It sort of gives you the ultimate financial freedom in terms of what you do with your money and whether you make a payment, etc. Okay, so that brings me to the second potential drawback. Now basically, when you do a reverse mortgage, you have to be age 62 or older to do it. Now in the past, they used to allow you, if you were married and one of you was 62 or older and the other one was not, they actually used to allow you to not include the younger person. Now this has been fixed because they did change it. It didn't fix it 100%, but what used to happen if you did that is that the younger person didn't have the right to live in the property for the rest of their life like the actual borrower does. So if the actual borrower passes away first, then the surviving spouse has to figure out what to do. They might be able to refinance it, they might not, and if there's no insurance policy in place to cover that, then they can find themselves homeless, basically. But they've since fixed that. So what it is now, in terms of how it works, is you can actually do it even if your spouse is younger, but they base the loan on the younger spouse's date of birth, which means you can borrow less than if you based it on the older spouse's date of birth. But now you're both able to live in the property for the rest of your lives under the new rules. The drawback to that is that, let's say you did a reverse mortgage for $300,000 as a line of credit, you've used $100,000, the balance grew to $150,000, and you have $250,000, $300,000 available on your line of credit, or whatever the number might be. Any available credit that might be there when the actual borrower passes away is no longer available to the younger spouse once the older spouse passes away. But of course, she'd be able to go ahead, or he, and just refinance the reverse mortgage if there's enough equity. But they've definitely fixed it so that the younger spouse isn't left out in the cold. That said, I'll go ahead and move on to the last drawback. And this, frankly, I don't think it's necessarily a drawback to the program itself. It's just something that I think happens because people are aging, etc. But here it is. So with a regular FHA mortgage, the default rate on taxes and insurance is pretty low. It's just a couple percent. What happens with reverse mortgages is the default on taxes after people take a reverse mortgage is more like 14, 15, 16, 18%. It's a lot higher. It's monumentally higher. And that's not necessarily a flaw with the program, but it's just something to be cognizant of when you do a reverse mortgage. But then also too, that problem has sort of been fixed. In the last couple of years, they added a financial assessment where in the past, there was no financial assessment. It was like, hey, there's no payment on this mortgage, so we don't care what your income is, etc. And we didn't verify it, nothing. But we've since changed the rules and said, hey, we need to at least do some due diligence to make sure that the older homeowners have a chance to succeed in this loan and make sure that they can probably pay their taxes and insurance based on their current income and credit situation. So we do look at that now. So potentially those 14 to 18% could be dropping over the years to come because of the financial assessment. But we don't quite know that just yet. But again, this isn't necessarily a flaw or a drawback to the reverse mortgage program. It's just something that you should probably be aware of. Keep in mind that you do need to pay your taxes and insurance when you do a reverse mortgage. You just don't have to make a monthly mortgage payment for the amount of the money that you borrowed to the bank. Okay? That said, there's your 3 potential reverse mortgage drawbacks. Again, I love the program, but every program is not for everybody, and I think it's only right that you understand all the drawbacks, positives, etc. Now, if you're thinking about a reverse mortgage, I'd love to help you or have someone at my company help you. So go ahead down in the description below, click on the link and get your free reverse mortgage information kit. Thank you very much. Enjoy the rest of your day.